Coming up on Market to Market. As harvest begins to fill the bins, will it be enough to fuel the rural economy? U.S. beef could be what's for dinner in China as a long-standing ban is lifted. And producing pork with a purpose. Those stories and market analysis with Dan Hueber next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, September 30 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Debates are all the rage this week as presidential candidates, the Federal Reserve Board, and economic prognosticators took the nation's temperature. Consumer confidence jumped in September to its highest level in 9 years. The rate of 104.1 is the strongest reading since August of 2007, 4 months before the beginning of the Great Recession. Orders for durable goods declined slightly in August, mostly on news of fewer orders for commercial aircraft. American manufacturing overall has slumped this year as a stronger dollar and weaker energy prices tempered growth. OPEC announced a preliminary deal to reduce production for the first time in 8 years. The news jolted the trade. The economy down on the farm has been closely monitoring these vital signs. And the first patient might be the banks on Main Street. David Miller reports.
This week, Fed Chair Janet Yellen told the House Financial Services Committee the timing is right to eliminate any barriers to a rate hike.
Well, there's no fixed timetable for removing it. Many of my colleagues indicated in their recent projections, the majority, that they would see it as appropriate to make a move, to take a step in that direction.
Despite last week's 7-3 vote by the Fed to leave its key interest rate alone, Yellen's testimony has many in the financial world expecting a move in December.
We must carefully monitor the impact of the regulatory changes we have made and remain vigilant regarding the potential emergence of new risks to financial stability.
It's been nearly 10 months since the last adjustment to interest rates. In December of 2015, the Fed bumped the amount it charges banks for money from 0 to between 1/4 and 1/2%. Yellen's testimony gives rural America some insight as to how one element of the financial landscape is shaping up for next season. However, monetary returns in farm and ranch country are expected to be lower, setting the stage for a gloomy finish to 2016. According to recent USDA data, those who produce food and fiber are facing the third straight year of declining profitability. Net cash farm income is forecast to fall 13.3% to $94.1 billion when compared to last year. And net farm income faces a similar drop as forecasts call for an 11.5% decline to $71.5 billion. If realized, it would be the lowest net since 2009. There was at least one bright spot for producers among the government estimates. Production costs are predicted to be lower for the second year as bureaucratic soothsayers put expenses at $21.5 billion, 5.7% under their February estimate. And the federal government continues to work on creating new overseas opportunities for U.S. goods, including peddling the politically dead Trans-Pacific Partnership.
It will open up more markets to our farmers, ranchers, factories, and businesses of every size. And these are markets that include tens of millions of middle-class American consumers.
One of the worst deals ever.
The outcome of the upcoming presidential election may stop any further negotiation of the landmark 12-nation trade agreement, as both candidates have joined congressional leadership in their refusal to support the pact. For Market to Market, I'm David Miller.
USDA announced late Friday that there are more hogs and pigs in the pen. The quarterly report shows the number of animals put in the lot jumped 4% since June. More product usually means a bearish outlook for prices, and pork is following the script, losing half its value over the same time period. Economists also are calling for lower egg and beef prices. Cattle producers have been looking for bullish news to help shock their markets and may have found some in a place inaccessible for more than a decade. Colleen Bradford-Krantz explains.
The recent announcement that Chinese leaders plan to lift a 13-year-old ban on U.S. beef was greeted by optimism from cattle producers. The ban has been in place since the 2003 discovery of a case of bovine spongiform encephalopathy, or BSE, in Washington state. China's announcement, which also applies to Canada, is a first step toward the world's most populous nation resuming imports of U.S. and Canadian beef. According to USDA officials, China had imported $10 million of U.S. beef before the ban in 2003. In recent years, the value of China's worldwide beef imports has increased dramatically, and by 2015 amounted to nearly 500,000 metric tons, valued at $2.39 billion. The Food and Agriculture Organization of the United Nations estimates that per capita meat consumption by China's 1.3 billion people has increased from an average of 12 pounds in 2003 to nearly 16 pounds annually in 2013. BSE, first observed in 1984 in cattle in the United Kingdom, is a fatal brain disease that can be transmitted to humans eating meat from an infected cow. The U.S. has had only 4 cows confirmed with BSE since 2003. USDA officials said because the details have yet to be resolved, a date for resuming exports to China has yet to be set. Still, the news was welcomed by beef producers at a time when market prices have been on a general downward trend. USDA experts are predicting a nearly 12% increase in beef production and more than 10% growth in pork production over the next 10 years. This follows a decade of declines in consumption as prices rose more than 50%. With the anticipated expansion comes a potential price drop of over 10% by 2025. Nevertheless, USDA number crunchers expect consumption of all meats to rise nearly 3% during the same time period to 219 pounds per person annually, putting a little more meat on the bone for producers. For Market to Market, I'm Colleen Bradford-Krantz.
Sometimes the constraints of living the urban life will inspire city dwellers to cash in their subdivision for a wide open space. Few, if any, are able to successfully make the transition to the great outdoors. However, as producer John Torpy discovered, one family's step toward country living yielded unexpected dividends.
In the spring of 2013, in the rolling hills of southeast Iowa, Jason and Angela Johnson launched Lucky George Farm. It had been their dream to live on a small farm, raising and growing their own food, and at the same time being good stewards to the land. Without realizing it, the couple stumbled upon a successful strategy to produce pork with a purpose instead of pork with a profit. What grew from their hard work has gone far beyond their wildest dreams.
It fit the way that we wanted to farm, which was hands-off. Not intensive farming, hands-off, an extensive model, a traditional model rather than a conventional model.
On 20 acres, the Johnsons carved out a multi-species plan to pasture heritage breed chickens, geese, sheep, goats, cows, and pigs.
I thought, what if we could find a system that honored the animal and allowed them to grow to an older age, be raised outside, and in an environment that you could put many animals in. It produces a product that's different than what you would find elsewhere.
To help offset input costs, the family began selling various cuts at farmers markets in Iowa and Kansas. Word spread about their product line, and an urban audience started to take notice.
More products that you can offer, you can bring to the customer, drives an interest. So there's certain producers that maybe only have beef or maybe only pork, but if somebody walks up to our booth, they're like, oh, you have quail eggs, you have chicken eggs, you have mutton, which is an adult sheep. That's something that nobody sells. We have goat meat, and we have large black pigs. So, there's an interest there that just doesn't exist among other producers.
They had been searching for pork that would be healthy enough to meet their dietary demands and be hardy enough to thrive in an outside environment like Lucky George Farm. All the characteristics the Johnsons were looking for were found in the large black heritage breed.
We bought the farm for us. We did not buy the farm to be a business. And it was totally a shock and surprise the first 6 months when we found out other people wanted our meat.
Some of those other people showing interest in Lucky George products are part of a movement known as Koshan 555, a group that promotes heritage breed pork and those who produce it. Through culinary competitions staged across the country, organizers pair up top chefs with small family farms in an effort to raise awareness about the unique breeds.
And when you find it, it's small family farmers who are raising it. It can't exist on an industrial level. So it's almost every time that you buy heritage breed pork, chew on it, you're just supporting family farming. It's a direct hit.
Organizers at the Minneapolis semifinal Koshan 555 event began looking to pair up the Johnson family with a top chef who wanted to work with the large black breed. Jorge Guzman, executive chef for Surly Brewing Company in Minneapolis, Minnesota, answered the call.
It's a heritage breed that you don't see very often. So even promoting the fact that you're doing a large black, like people are like, well, what's that? Like, when's the last time you heard of a large black hog? You don't hear about them that often. And so that's part of what Koshan and Lucky George Farm, that organization is trying to promote heritage breed hogs, and large black is one of those hogs, and it's just a better product.
Guzman believes in supporting heritage breed production to educate consumers on the differences in taste and character found in old world breeds.
So knowing that we have a responsibility, that's how we source our food, and hopefully it's a trickle-down effect. Like, this is the way that most restaurants should purchase.
On any given Saturday, Surly Brewing Company restaurants will see 2,000 customers, far too many for small operations like Lucky George Farm to provide a large enough supply. But for special occasions, Guzman and his team purchase and prepare a plethora of plates using exclusively heritage breed pork.
So that's your pork chop, and your loin, and then your belly, and then...
Guzman praised large black hogs for their marbled red meat and points out the fat has a higher smoke point, which produces a higher quality white lard.
You can tell how nice that fat is. I mean, you don't see that on commodity pork.
So what we have for you is...
With the win at Koshan 555 in Minneapolis, Guzman, his team, and Lucky George Farm earned a seat at the big table in Snowmass, Colorado, for the Grand Koshan. 10 teams from across the country went head-to-head in hopes of being recognized as having the best-tasting pork in the country. Each team presents their dish to numerous judges and hundreds of guests who vote for the best bite of the day. But no matter who wins, exposure and awareness of heritage breed pork and the farmers who produce it is the real prize.
It is amazing to see, a farm like Lucky George jump into the game, do something they believe in, be very passionate about it, and that product showcases what the stewards of those animals are doing, and it comes through in that animal. It comes through on a plate for a chef.
These pigs have a life, and they're going to one day be on your plate. They have a life with purpose, and hopefully we're raising them in a purposeful way.
For Market to Market, I'm John Torpy.
Next, the Market to Market report.
Friday's quarterly grain stocks report from USDA did little to move the market as harvest began in earnest around the grain belt. For the week, December wheat was off 3 cents, and the nearby corn contract finished flat for the second consecutive week. Bountiful harvest kept a lid on good export news as soybean prices finished a penny lower. October meal dropped $5.40 per ton. In the softs, December cotton shed nearly $2 per hundredweight. Over in the dairy parlor, October Class 3 milk futures soured by 42 cents. The livestock sector was under tremendous pressure as the December cattle contract fell $6.72. November feeders plummeted $10.08, and the December lean hog contract plunged 10% to finish $4.92 lower. In the currency markets, the U.S. dollar index lost 1 point. Crude oil advanced $3.76 per barrel. Gold dropped $24.60 per ounce, and the Goldman Sachs Commodity Index increased nearly 13 points to finish the week at $363.95. Here now to lend us his insight on these and other trends is one of our regular market analysts, Dan Hueber. Dan, welcome back.
Thanks very much. Glad to be here.
Well, we did have the quarterly stocks report and the USDA small grain summary.
Correct.
Wheat was up despite an apparently bearish number on that quarterly stocks report. Talk us through a little bit what happened.
You know, again, I think we've been hearing so much negative news here, really not just in the last week, but really over the last several months. You know, we be it in the wheat production numbers or, you know, back into corn and soybeans, you know, we've just become accustomed to hearing larger and larger numbers. And I think the market has kind of reached the point where it's just old news. And I mean, we've heard that same song too many times, and we need something a little bit fresh there. And, you know, sometimes the markets just need that last little pump of negativeness to shake out the rest of those to the downside, and the path of least resistance becomes back to the upside then.
So are you a buyer of wheat in here?
You know, I don't know if I'm really advocating a bullish position, but on the same token, I don't think there's a lot of downside risk in the wheat at this point. You know, here again, I think we have just factored in so much of the negative supply side of that market. And really in all those reports today, that was the only category that had a higher than estimated number, but even then it was not that far out of range. You know, granted, it seems almost flippant to say, but, you know, 100 million bushels here or there, big deal. You know, I mean, when you've got 2.5 billion out there, it's just a lot of wheat around. So it's, you know, I think you would have had to have a shocking bearish number to really push this wheat market lower at this point in time.
And despite really the lack of a shocking number on the grain reports, we saw corn put on a pretty decent rally on Friday. Tell us what happened there.
You know, corn, absolutely the best performer on the day, and of course was negative to start the day. And I think, again, granted, you have to add in the fact that we were at the end of the week, we were at the end of the month, we were at the end of the quarter. But maybe as important as anything, you know, this is that time of the year where you really kind of move into kind of a transitional phase, you know, where we've been talking about supply for months on end. And again, as we mentioned just a moment ago, you know, each month that supply has become larger in traders' minds, at least. I mean, we'll ultimately see if it's as big as the USDA has told us it's going to be. But regardless, you know, we got to the point where, all right, we've heard this number. Usually around that 1st of October, the markets tend to start focusing a little bit less on supply and start thinking about demand. And
so it's a shift in sentiment you start to see happen.
Shift in sentiment, shift in psychology, and, you know, maybe once you move into the past October, we know harvest is here with us, and granted, that's going to keep a lid on things. I mean, it's depending on how farmer movement is, but on the same token, a little bit less focus on that huge supply and start thinking about, you know, where is the demand going to start shaping up.
So for producers who are out in the field today harvesting or planning on it in the next week, who recognize that their yields perhaps are there, they're running out of storage opportunities, are you just selling off the combine what's needed for cash flow on this bump, or how do you handle it?
I think, you know, granted, if you're out of storage, you're out of storage. There is a reasonable amount of, you know, it is a little bit strange. You know, we've got about a 25-cent carry to July futures in the corn market, which is as large as the crop and as big as the carry-in was. You would suspect we would have been a little wider, maybe towards 30 cents. I don't know if that's really telling us a story or not, but you take a 25-cent carry, a 30 or 3,500 basis level, you've got 60 cents to carry corn the next summer. If you can store it, do it. That said, I don't think you want to lose ownership of the corn at this point in time. If it is unpriced, you know, work out if it's renting commercial storage, try to pick up that basis appreciation. But I do think you want to maintain ownership somehow
at a value
or another.
level.
Correct.
Okay.
Correct.
Now, soybeans, quarterly stocks reports, implied disappearance for this fourth quarter of 2015-16 marketing year. Phenomenal. Record usage, apparently, and yet beans did nothing.
Well, and again, the bean market, I think, has it really received a lot of good news recently, but the psychology of the harvest is there with us. When you start hearing 80 and 85 bushel bean yields out there, that tends to maybe keep people to the sidelines. That said, we've really pushed down November futures into this 940 area, really developed into a little bit of a 940, 960 trading range here at this point in time. Now, granted, I think the ace in the hole here is we're going to have to continue to see those export sales come in on a regular basis. Great sales again last week, 1.6 million metric tons, of which, of course, China is that 800-pound gorilla that continues to purchase them. But I think it's as long as we can kind of keep those kind of sales numbers coming along, it's going to keep that market stable. But I think we got to get past that onslaught of initial harvest before we can think we're going to come out of this range too.
Now, you mentioned China being a phenomenal buyer of U.S. beans. We've seen them tinker with their importation of DDGs. We've got a question here from one of our followers on Twitter. This is from Will in Jasper County. Will wants to know, what, if any, effect will the news of China exporting corn have on the markets? It was an interesting story. Of course, came out overnight. They gave at least two companies authority to maybe export up to 2 million metric tons of corn. That is filled with so many holes, I guess, in that story. Where are they going to find a buyer? No pun intended on the quality of that corn there, as far as being full of holes. But, it's going to have to be a price or transportation differentials. Possibly, I'm sure they're trying to target a South Korea. There may be a user in South Korea that would look at this as if they could buy it at a heavy enough discount. Easy to get it transshipped over to that area and blend it off with some corn, maybe extend it to some supplies. It was a surprise, but obviously I think this is indicative of the fact that they've been trying to sell this corn off by auction, have had just disastrous results. They really can't get rid of it, and I think they're just kind of grasping for any way they can to start liquidating these supplies that they've been sitting on for years. Maybe it'll just start going into the ocean. Well, that would be a nice thing for the global corn market. I understand they makes a good heat in a furnace as well. So yes, it does. All right, now as we take a look over at the livestock market, boy, ugly week. As we look at live cattle in here, we're getting awfully close to that spike low we put in at 99 and change. Do we take it out, Dan Hueber? Potentially it still could take it out. I mean, there's nothing in the picture other than if you look at the very long-term picture, yes, we are approaching, or we're very close to areas of what you have to consider as long-term value. But, even with that, the story of the potential opening the Chinese market, I don't know. I don't know if that's going to be enough to turn us around here right now. So it's all that said, beat hogs, beat cattle, either one. Yes, I think we're in that final throes. I mean, the action this week especially in both of those markets did seem to be indicative of that kind of give up, that blow off that happens at the bottom where everybody says, it's hopeless, we got to get out, and then you're finally done. Is it perfect to say that we're there yet? Probably not yet, but if we can stabilize a little bit next week, then I think there's a little glimmer of hope that we're at the bottom finally. Okay, now we look at the feeder market. We saw that spread start to happen. We've been hearing a lot of concerns that feeders are still overpriced. Sure. Finally, we broke the live 6, broke the feeders 10. Right. Is that just a sign of more to come? Well, I think it's a sign of reality, that ultimately these people are going to get resistant as far as what we're going to put into the feedlot. It has to be at a price, and granted, we know that the input side of it, the feed grain side of it is very reasonable, but that only goes so far as well. And we're not really seeing that side of the market deteriorate much. In fact, it looks like in the corn, and not so much in the meal, but certainly in the corn market, you've hit this point of value, be it in domestic or on the export market here. I mean, Mexico was in for some phenomenal quantities of corn this week. For 2 marketing years, both this new crop and 17-18. Right. So, I mean, if you've got some stabilization in the grain side of it, but really no recuperation on the fat side of the market, it's hard. It's kind of difficult to think you want to be positive on the feeders until we get a little bit more of a realignment in that market at this point. All right. Other big news on Friday was the USDA quarterly hogs and pigs report. The market was limit down throughout the day. Report came out at 2 o'clock, and it was kind of surprising, wasn't it, Dan Hueber? Surprising, yes, in the respect that it still showed we have a lot of pork around that we need to deal with. I guess when you look at the numbers, the sow intentions moving ahead were actually reduced.
And I think when you look at the weight breakdown, most of that excess pork is there. It's here. It's with us right now.
That was my question too. As I looked at the report, it did seem like the much larger than analyst expectations were in the heavier weight.
It's the 180 pound plus.
Right.
I mean, we're really going to have that cleaned up here in the next 30, 60 days. Hopefully we get a little stimulation of the traditional Christmas ham type of market. That maybe we'll clean up part of that as well. But when you look at that weight breakdown, to me, it said. Here again, I think it tells us we're nearing the end if we're not at it already. We just need to clean up a little bit of this backlog. In both of those markets, and granted, this is something that could impact commodities in general, I still maintain if there's a surprise element that could come around in the fourth quarter, it could come via the dollar. I mean, the dollar's been really kind of teetering on the edge like it wants to break down. And, I think if you broke lower, back below the 93-cent area, which has held it for the last 2 years. I mean, not that it goes into a free fall, but boy, psychologically, that I think would do a lot for livestock and grain markets both.
Just as a whole, to bring that money off the sidelines or out of equities into the commodity world.
And of course, there's something that's even a little bit deceptive too. We still have seen a lot of money moving into commodities this year. In fact, it was just a release yesterday that from January through the end of August, we've had $55 billion move into the commodity realm, which is our new record for that period of time. Now, granted, a lot of that has been centered in gold. As people are a little bit unsure about the world economics and crude oil or energies in general, but it does tend to spread around in all the commodities there. So I think the smart money is still looking at the commodity sector as being a value area and a place where money can flow into. So.
All right. Well, Dan Hueber, we'll keep an eye on that. Thank you so much.
Very good.
That wraps up the broadcast portion of Market to Market, but Dan and I will keep the market conversation going, including answering more of your questions during Market Plus, available on our website. Do you want to be ahead of your neighbors on knowing what's coming up on this program? Go behind the scenes with the latest edition of the M2M podcast. You'll find it wherever you get podcasts by searching MTOM. And join us again next week when we explore how domestic catfish farmers are fighting off foreign competition. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.